This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Turbulent week. Stocks zigged up and zagged down, and next week could bring more of the same.
Pipeline problems, why drivers in some parts of the country could be in for a surprise when they go to fill up.
Protecting your money. Does your financial planner know how to keep your information safe from hackers? Those stories and more tonight on Nightly Business Report for Friday, September 16th.
Good evening, everyone, and welcome. A dizzying week on Wall Street ends with a drop. Over the past few sessions, investors saw volatility awaken from its summer slumber. Some days, the bulls were firmly in control. Other days, the bears. And the big moves seemed to hinge on the economy, the data, the Federal Reserve, and what, if anything, policymakers will do when they meet next week. Probably nothing, by the way, but hey, you never know. But it wasn't just the Fed. One stock in particular also played a key role in the swings all week long, Apple. It was up about $10 for the week, but lost some ground today. Today, the Dow Jones Industrial Average off 88 to 18,123. NASDAQ fell 5. The S&P 500 declined by 8. For the week, though, NASDAQ was the big winner, as you see right there, up more than 2%. Bob Bazzani takes a look at the week that was and the week that may lie ahead.
It was a wild week. It started with fears that the Fed may raise rates next week. Stocks moved down and bond yields moved up. But stocks settled down late in the week, and the big story shifted to Apple. The problems with competitor Samsung and strong orders for the iPhone 7 pushed the stock up 11%. Now, Apple's by far the biggest stock in the U.S., and when the biggest stock in the U.S. moves 11% in a week, that's news because it not only moves the stock, it moves the markets. The S&P 500, the main market index used by professionals, is market cap weighted. So the bigger the stock, the more it moves the index. So how much did Apple matter to the markets? The S&P is up about 10 points this week. Apple was responsible for 7 of those 10 points. And remember, Apple's in the Dow. The Dow's up about 35 points this week, but Apple was responsible for pushing the Dow up about 75 points. In other words, without Apple, the Dow would be down about 40 points instead of up 35 points. See? Next week, it's all about the Fed. Now, most expect the Fed will not raise rates, but there's a good chance they'll sound hawkish, that they will make noises that they still might want to raise rates later this year. For Nightly Business Report, I'm Bob Bazzani at the New York Stock Exchange.
So will next week be another wild week for stocks? Katie Nixon joins us, Chief Investment Officer at Northern Trust Wealth Management, with her outlook for the markets. Great to see you, Katie. Welcome.
Thanks, Sue. Nice to be here.
It was a wild week. Do you anticipate, because there's so many different events still ahead of us, that volatility will continue?
We do, Sue. I mean, as you were saying before, we've come off this lull. So we have a little pent-up volatility demand facing us right now, and we're historically in a period of time in the calendar where we do face higher volatility. And then we have all the news that's going to come out next week regarding the Bank of Japan, and clearly the Fed's going to be a needle mover.
Do you think the Fed is going to remove the punch bowl? Are they going to water down the punch? What are they going to do?
You know what, Tyler? I think they're going to keep their options open. So we think September's off the table. I think Fed funds futures would suggest that's the consensus.
Yes, less than a 20%.
Less than 20. December is about 50, a little bit higher than 50 today. So that's a bit of a coin flip. We don't think the Fed's going to move in December, but we do think the September FOMC statement is going to be very interesting, and we're going to be watching carefully for a change and a nuance in their language that would suggest that they're leaning a little bit more towards the hawkish
What's
side.
What's holding them back, though? Is it the election that they don't want to be perceived as influencing it, or what?
No, I don't think so, Tyler. I think, as a matter of fact, they like to look apolitical. So, in fact, they might like to go before the election, but I just don't think the data is there to support it. I mean, we've had this tug of war between some very weak macro data, whether it's the PMI, manufacturing and services, we had retail sales, industrial production, goes on and on. Seems like the things that are moving in the right direction are employment, and perhaps we had a small uptick in inflation, but we're still far below the Fed's target on the PCE.
So where do you think a good place to put money for the longer-term investor is right now? Do you still favor risk assets or not?
Well, I'm glad you used that phrase long-term, because we do think that this is a point in time when investors are going to have to really think about the long-term. These are going to be volatile markets, a lot of news flow, a lot of noise, right, in the market. So taking the long-term perspective is the only way you're going to be successful in this market. We do prefer U.S. assets. We like risk assets. We like things like U.S. equities. We like high-yield bonds here even. But it's all based on the premise that the Fed will remain very accommodative, the economy will grow slowly but positively, and those are two supportive pillars to risk assets.
How many interest rate hikes do you anticipate over the next 12 to 18 months?
We have one rate hike over the next 12 months. Quarter point to and through, and that might be the last one. The economy simply is not robust enough to require a more aggressive Fed.
All right. On that note, Katie, thank you so much. Have a great weekend.
Thanks, Sue.
Katie Nixon with Northern Trust Wealth Management.
Oil prices fell today and about 6% for the week, but the attention today was on gasoline. The price of that commodity rose sharply on concerns that a pipeline leak in Alabama could lead to potential supply shortages in parts of the country. The leak closed part of an important pipeline, and as Jackie DeAngelis reports, that could prove costly, at least temporarily, in some parts of the country.
Part of the country's largest fuel pipeline has been shut down. The Colonial Pipeline runs from Houston up through the East Coast and delivers gasoline to more than 50 million Americans from the refineries. A leak that started September 9th is what prompted the shutdown, which is expected to be resolved next week. The disruption has been seen in the gasoline futures market. Prices rose roughly 7% in the last week, even as the price of domestic crude oil fell about 6% in the same time period. That move could translate into higher prices at the gas pump, at least temporarily. Seasonally, this is the time of year that experts expect gas prices to decline as summer driving season pulls back. In fact, earlier this week, estimates were for a 5 to 10 cent short-term drop. But a prolonged transportation disruption could have the opposite effect, causing as much as a 15-cent spike in some parts of the East Coast, including Atlanta, the Carolinas, and Virginia.
Now gasoline is getting back, let's say, into at least a level where I thought at least it belonged. Gas prices probably, if nothing else, will come back a little, but they've been so depressed for so long, I don't think anyone on the consumer end is going to have a problem.
AAA currently says that the national average for a gallon of regular is $2.18. That's down from a year ago, but up 5 cents in the last month. While stocks of refined products built this summer, a glut continues to linger. The key, however, to retail gas prices, transportation of supply, and an extended outage of a key artery is a catalyst that could change the game. For Nightly Business Report, I'm Jackie DeAngelis.
Consumer prices rose more than forecast last month. Much of that increase had to do with medical costs, which saw the biggest jump since 1984. Higher rents also contributed. The latest government report shows that the Consumer Price Index was up 0.2% in August. And while Americans are paying more for housing and health care, we're paying less for food and energy.
The net worth of households in the U.S. hit a record in the second quarter. The stock market and a steady rise in home prices drove those gains. According to the Federal Reserve's quarterly report, households now have a total net worth of more than $89 trillion. The report also showed that more Americans are taking on mortgage debt, which saw the biggest quarterly gain in more than 8 years.
Another bank in the crosshairs, the Justice Department is reportedly going after Deutsche Bank for its mortgage lending practices that led to the housing and financial crisis. The size of the fine is being described as mammoth. That sent shares of the German bank sharply lower. Wilfried Frost has the details.
One of Europe's biggest banks, Deutsche Bank, is facing a fine of up to $14 billion from the Department of Justice. It has emerged in leaked documents showing the scale of the fine the German lender faces in response to mortgage-backed securities fraud during the financial crisis. It's an issue that has already seen America's biggest banks fined in recent years, with the decision on Deutsche and others in Europe still pending. However, the final sums paid were significantly below initial leaked numbers, and Deutsche Bank likewise expects the final fine for them to be a lot less than $14 billion.
It's a very high number. This was the case with other banks, with our peers in the United States, and we all saw that these numbers go down significantly then. And so we are very confident that we will be able to negotiate this number significantly down, and we are sure that we will treat it fairly in this process, so are quite optimistic that this number definitely won't be the final one.
Either way, alongside the recent Wells Fargo saga, which is a pending Senate hearing next Tuesday, the regulatory environment for banks in the US remains incredibly demanding. For Nightly Business Report, I'm Wilfred Frost at the New York Stock Exchange.
And speaking of Wells Fargo, the pressure is on there and intensifying. The House Financial Services Committee says it has launched an investigation into, quote, alleged fraud at the bank and will hold a hearing later this month. Separately, in a letter released today, 5 Democratic senators asked Wells Fargo to take back bonuses to executives linked to the phony bank accounts that were created to meet sales quotas. And still ahead, your financial advisor has incredible access to very personal information, but a new survey questions whether they know how to keep it safe.
Apple enthusiasts lined up across the globe for the new iPhone 7 and 7 Plus. From Sydney to Tokyo to New York, people stood in line for hours to buy the newest generation of the device. Though some estimates say the crowds were not as big as in years past, that could be because pre-orders appear to be very strong. And in keeping with tradition, Apple CEO Tim Cook made an appearance at the Apple Store in Palo Alto, California. If you work and you're on the road a lot, you know this scenario. Your smartphone is out of power and you need a quick charge. But plugging into that public station could expose your confidential emails, passwords, and more. Andrea Day explains.
What they don't realize is absolutely everything is recorded.
It may look like a free charging station, but plug in and hackers could see every move you make.
But you can see it's clearly recording, and it's just captured everything on my phone.
He calls it video jacking, a new form of digital eavesdropping discovered by CEO Brian Marcus and his group at Ares Security. Marcus showed us how an attack could work by rigging a charging station with a hidden HDMI cable. The HDMI cable taps into a feature that's automatically enabled on most devices. It allows you to project images from the phone onto a TV.
And there's no security prompting asking the user if they're sure that they want to allow this to go out.
So he says if you connect a vulnerable device to this, hackers could secretly record a video of everything you do.
You go into your online banking application to take a photo of a check. Well, that's recorded. When you connect to your contacts, all of that is recorded. If you do an email or a text, everything on the screen is 100% recorded.
He says the spy charging station is simple and inexpensive to build and could be at an airport, convention center, or any other public space.
From the moment that you plug in that cable to the moment that you unplug that cable is exposed and recorded.
And he says most HDMI-ready smartphones are at risk.
Apple phones, Samsung, Google phones, etc.
Google declined to comment, and Apple and Samsung did not respond to our request.
If I plug this phone in, thinking that it's a standard charging cable, and then put it onto the HDMI splitter for that specific cable, you see that the display is now mirrored.
So should you be concerned? He says so far he doesn't know of a victim who's reported an attack, but they may not even know it happened.
One thing that I'm very sure of is if I don't think of something and I don't talk about it publicly, somebody else will. And it's much safer for us to expose these risks.
And he says the best way to make sure it doesn't happen to you, use your own charging cable and plug it directly into an outlet or carry along a battery pack. I'm Andrea Day for Nightly Business Report.
Now to another type of online threat, sorry to say. New research shows that most advisors think cybersecurity is a problem, but not all of those financial pros now know how to protect their clients' information. Sharon Epperson has more on the study from the New York Stock Exchange. Sharon, welcome. What did the study say?
Well, a recent study, it just came out today from the Financial Planning Association and TD Ameritrade, took a look at what financial advisors know about cybersecurity. Overwhelmingly, they believe that it's a problem. 81% of financial advisors in this survey said that they identified it as an issue, but only 30% said that they completely agreed that they are prepared to deal with what could happen and to mitigate the risk if hackers become involved.
So Sharon, if you're a client of a financial advisor, what should you do? I mean, should you talk to them or ask them about how prepared they feel to safeguard information?
Certainly. We're talking about your Social Security numbers, bank and brokerage account numbers, really sensitive information, your home address. All of these things you need to protect. And the way you do that is to ask some important questions to your financial advisor right away. You want to make sure that they have a plan in place. So first question is, who has access to my information? The more people who have access, the more potential for your information to be at risk. You want to know where that information is stored. Is it stored electronically? Is it stored in a physical location? Either way, it needs to be a secure location. And what happens to the information if you part ways with the advisor or the advisor leaves? How is that information deleted? Is it deleted? These are important questions to ask your financial advisor.
So what can you do on your own to protect your information?
Well, Andrea brought up some really great points. You really need to be careful with your own information, and that is when you're emailing your financial advisor, don't put in your Social Security number or your bank account numbers. If they're asking you for that information, make sure that you understand the reason why they need it and call, say it over the phone, but don't put that in an email. If you are electronically communicating with your financial advisor, make sure it is on a secure website, and that, as we've talked about, is HTTPS. To make sure it's secure. S is for secure in terms of the website. And then also you want to make sure that it's an encrypted email. So if you're sharing files, make sure you have a password protected exchange with an encrypted password.
Yeah, a lot of the brokerages do have that, where it's sent on a kind of private network with encryption. Sharon, thank you very much.
Certainly.
Sharon Epperson. And to read more about how secure your information is or isn't with your financial advisor, head to our website, nbr.com.
Intel raises its revenue forecast, and that's where we begin tonight's market focus. The Dow component lifted its sales guidance for the first time in more than 2 years. The company says PC makers are renewing inventory, which is increasing demand for Intel's chips. Intel, easily the best performing stock on the Dow today, rose more than 3% to 3767. New York Attorney General Eric Schneiderman is reportedly investigating ExxonMobil's accounting practices. According to the Wall Street Journal, Schneiderman wants to know why the energy company has not written down the value of its assets amid a 2-year slump in commodity prices. The stock fell more than 1% to 84.03. Pharmaceutical giant Johnson & Johnson will buy Abbott Laboratories' eye health division for more than $4 billion. The acquisition is expected to close early next year, and it expands J&J's diagnostic business. Shares of Johnson & Johnson were off slightly, while shares of Abbott gained more than 1.5%. And hospital provider Community Health is said to be exploring a potential sale. That's according to a Bloomberg report. The company is discussing options with its advisors, but the report also noted that a deal may not happen. Community Health shares rose 15% on that report to $12.27.
Unilever may soon acquire Jessica Alba's organic products retailer, The Honest Company, for far less than what it was once valued for. The Wall Street Journal reported that the two consumer products makers are in talks regarding a takeover worth more than $1 billion. Last year, The Honest Company was given a $1.7 billion valuation. Shares of Unilever dropped slightly to $44.94. Honest Company is privately held. General Electric said its nearly $2 billion deal with a UK-based energy company has been approved. The conglomerate will provide equipment for construction of a nuclear power plant. GE shares fell just a little bit to $29.68. And 21st Century Fox will sue Netflix, alleging the video streaming company knowingly recruited and hired two of its executives while they were still bound to an employment contract with Fox. Shares of 21st, it's actually 21st Century now, not 20th anymore, at $23.90, up 6 cents, just a little bit. Netflix shares up by 2% to $99.46. Our market monitor likes stocks he says are dominant in their sectors and will do well in any economic environment. Call them all-weather companies. This is his first time on the program. He's Jimmy Lee, managing partner at the Wealth Consulting Group. Jimmy, welcome. Good to have you with us. What makes an all-weather stock in your view?
Well, we're talking about companies that dominate their space, that create a moat, so that in a economy that's weakening, they can still maintain a dominant position and do well. So I think that's important as we enter the later stages of the business cycle, Tyler. And if we do end up, getting a little bit of a pullback in the markets, I think these dominant names will be names that'll hold up much better.
All right, let's move to your first pick, which is JP Morgan Alerian MLP, which is basically a play on the energy sector. What do you see happening there, and why do you like this one?
Okay, well, here it is. It's kind of contrarian, Tyler, in the fact that the biggest hit to Q3 earnings has come from the energy sector in terms of, projections going down as far as estimates. But I think that for a longer-term investor, somebody that's looking for 3 years on out, I think be able to buy as oil is coming down closer to 40. If it gets below 40, I think those are great entry points into the energy sector. This ETN provides a nice dividend yield. So even if we have a sideways market, the dividend's a nice thing to be able to put in your bank account.
All right. And speaking of a dividend, Coca-Cola is on the list as well with a dividend of better than 3%.
Yeah, so that's kind of a theme, Sue, that you're going to hear from me is that, again, we think that even though we have a little bit of a higher target on the S&P for right now, I think that if earnings don't follow through in Q3 and 4, that a negative shock from somewhere could really hurt the market. So companies like Coca-Cola with a dividend dominate the space. Coca-Cola does really well in terms of packaging and marketing their products worldwide. And as the trend goes to more healthier products, they're going to be on the front end of that. So we like Coca-Cola as well.
And speaking of dominating the space, your next pick is Alphabet, the parent of Google.
Yes. So Google, have you seen recently, has gotten out of some of their non-core businesses. The core business of search in China, they got out of that. They got out of an auto insurance comparing company earlier this year. They're focusing on cutting expenses and driving more efficiency to the bottom line. We think there's potential margin expansion and higher stock prices for Google.
And what about the market overall, Jimmy? I mean, there are those out there who say that the volatility we've seen portends a pullback in the market. Do you agree with that or not?
I do. I think you can expect more volatility going forward. And obviously with the interest rate decision coming up next week, I agree with your previous guest that we're not going to have a rate increase here in September. So if we do get one, it will probably be after the election, maybe in December. So I think a lot of this uncertainty has created a lot of, volatility that we haven't had for a long time as the VIX has been low all year. Mm-hmm. But I think going forward, you can expect a lot more volatility. Again, we think there's a little bit more of an upside, and we think that taking these dips as we get sell-offs as buying opportunities, if you have cash, I think is a good idea.
Jimmy, thanks. Jimmy Lee, have a great weekend with the Wealth Consulting Group.
Thank you.
Coming up, it turns out kids who move more learn better. And one company is growing fast by helping students not sit still.
And here, folks, is a look at what to watch next week. Busy week up. On Tuesday, the Senate Banking Committee will hold a hearing on the fake account scandal at Wells Fargo. CEO John Stumpf has been summoned to testify. On Wednesday, Mylan's CEO will testify on the EpiPen price increase matter. And also on Wednesday, just got to remind you, the Federal Reserve releases its decision on interest rates, followed by a news conference with Fed Chief Janet Yellen. That is what to watch in a busy next week.
Well, we're seeing it in offices across the nation. Workers using standing desks, ball chairs, underdesk ellipticals. I have one of those. All in a move to move more. It has created a huge industry for active office furniture. Now that same movement is targeting schools. In our latest installment of Sweat Equity, Diana Olick shows us how schools are getting active in the classroom.
At Oak Ridge Elementary in Arlington, Virginia, school is back in session. And an experiment from last year is now a lesson learned.
I like all the equipment, all of them.
Kids who move more learn better. Kid-sized pedal desks, standing stations, and tiny ball chairs.
What's fun about a bouncy ball chair?
You can bounce on it.
All part of a pilot program at the school designed to get kids moving while they work. And it worked.
Some of the behaviors that teachers noticed increase were time on task, cooperation with each other, having an opportunity to sit and read for longer periods of time.
The idea came from Oak Ridge mom Heather Sovey, who wanted to keep her energetic son on task.
Even if I do before school fitness programs and recess and lunch and PE class, there's just an abundance of energy.
So when she saw a picture of a pedal desk online, she was sold. Sovey chose equipment from South Carolina-based Kids Fit. The company, founded in 1997, initially made kid-sized fitness equipment for gyms and therapists. 4 years ago, they started seeing demand from schools.
We wanted to make a difference in kids' lives.
So KidsFit started making active classroom furniture and never looked back.
We built all the equipment, and everything that we did was based on that science that says that there is a direct correlation between a healthy child and a smart child. We expect to grow by probably about 75 to 100% this year. It's really been crazy. It's just, it's been awesome.
We started with just a few pieces because fundraising is very difficult.
The Oak Ridge PTA raised $9,000 and tried the pieces they bought out in every classroom throughout the year.
The equipment is not all there is to making a fit classroom. The school has to commit to a philosophy of movement behind it.
It's a mindset that children move. We went from having them walk in silent, straight lines in the hallways to letting them have quieter conversations and wiggle as they walk down the hallways.
They also went through rigorous teacher and kid training. Shoelaces must be tied.
That way you don't so you get stuck on and then fall over.
That would be bad.
Yeah, get yourself hurted.
There have been no injuries, only pleas.
How do we get more?
It's going to be quite a feat, but we're willing and we're going to try and give our best.
In other words, she'll keep the balls rolling. For Nightly Business Report, I'm Diana Olick in Arlington, Virginia.
New meaning to the thought that kids are bouncing off the walls in the classrooms.
Exactly.
That's in my hometown, by the way, Arlington. Way to go, Arlington.
Yeah. All right. That'll do it for us for tonight, for this Friday. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Mathisen. Thanks for me as well. Have a great weekend, everybody, and we'll see you here. We're going to have a bouncy seat on Monday.
There we go.